Literally in 2017, the narrative was the institutions are coming. 2021, the narrative was the institutions are coming. And then right now, the narrative is the institutions are coming. And the truth is, every time they were right, and they're going to continue being right. Because you're talking about, essentially, here's the ultimate narrative. There are trillions and trillions and trillions and trillions of dollars of assets in the world. Those assets are coming on chain. And it's going to be a long 30-year cycle for this to happen. And every 4 years, you're going to see a burst in it. And that's the narrative for the next 30 years. So welcome to the Never Die Podcast, your ultimate source of crypto alpha for those who never quit. Today we have Smokey, aka Nick, on the podcast, and Harley. What's going on, guys? All right. First question on the agenda: was 62,000 Bitcoin the bottom of this dip, or are we going lower? That's the first question. I'll start with you, Nick. What's your take?
Yeah, I mean, I think like this cycle is a little bit different than ones that we've seen before, because we broke ATH before the halving. Right. So I think that's already something different. I think that was led by institutional adoption. Right. But, I do remember like the last couple cycles, we did have this bear trap that happened, and everybody was like all very excited. We're getting higher and recovering, and everybody's super pumped, and, we're going to the promised land again. And then bam, we just get absolutely cratered. So I think that is possible. If history repeats itself, just like it has, the last couple times, then we could definitely see lower lows. But I don't know. I mean, it might be too much now, too much going in the right direction with institutional capital coming in and retail and meme coins. There's so many different things that are coming together that might just, carry us past and not have us see lower lows.
Yeah, those flows are pretty insane. They throw like a wrench in like everyone's like models for like, oh, it should go this way, but then you have like all these BlackRock institutional flows coming in the space, buying all this Bitcoin, and you're like, well, it just kind of throws everything out the door. Everything you think might happen, it's like softened by this like just mass demand for flows. But I'll point out that flows can go two ways. Dude, those people could sell it just as quick as they buy it. So what's your take, Harley? What are you feeling?
I don't know. I mean, my son's Roth account, he's hodling his BlackRock ETF. Actually, no, he's in Fidelity. He's in Fidelity. He's not selling anytime soon. So you guys are safe from his 1K sell. Don't worry about that. But I think
Wait, dude, how old's your son?
2. I made him a website. Okay. I made him a website where we could, like a modeling website. So he could work as a model and get income to start putting away for his Roth IRA. So when he's older, he can do what he loves, rather than worry about retirement.
Yeah.
He's a model. Well, you'll see him. He's very cute. But 62K is the bottom, right? Is that what you're asking? Was that the number? 60?
Yeah. Is it the bottom?
Well, I go back to what I said last week about the depletion of OTC desks and how that's so different, right? It really ran them down. I don't know with this current dip how much they were able to accumulate. I haven't really looked at the numbers. I'd say it would have to happen soon, just because we're less than a month away from the halving now. I think it might miss 420 by like one day, which is very disappointing. I think it's April 19th scheduled now, which is unfortunate, but I think it has to happen before then, right? Because if the depletion on the OTC amounts stays where it's at, a move to the downside is going to be very difficult once the supply is cut, because you're going to see that impact much more immediately than you did in previous cycles, I think, just because of the accumulation ahead of time.
Yeah, Nick, we talked about this last week, which is that like the halving, I think a lot of people are dismissing it like, oh, it doesn't matter. Because, obviously like the first halving was a big cut in supply. It went from, I don't know, like 12 Bitcoin per block or whatever to 6. I don't know exactly what it was, but it was like a bigger cut. And like each successive one, when it goes from 6 to 3, that's a lot smaller, 3 to 1.5, yeah. Or I don't know the exact ranges, but you get the idea. It gets smaller and smaller, so it should have smaller impact. But I think the one thing people are underestimating is these flows. These flows, these miners are selling onto these exchanges, and that's where people are buying these flows from. And so when you add in the flows, I think the halving will have more of an impact than people expect and play into the scenario. And so, I think Carly's right that when we have the halving, that there will be a catalyst around that, not just from the halving itself, but also from the fact that like it's just a meme, right? Like everyone believes in the halving and thinks, hey, that this is the point things start to go up.
So I want to kind of like hit on the fact that this is the first time that there's been institutional demand for Bitcoin when there is a halving, right? So I think that this one actually might have the greatest impact that we've seen before, and I think it's like somewhere around like 7 Bitcoin or 7.5 Bitcoin is what they're getting per block now, and it's going to go down to 3.75, right? So like that's pretty considerable, right? So it's going to be much less profitable this time. So yeah, I mean, I've heard it talked about, over the next 10 years, once we get 10 years from now, 99% of Bitcoin will be mined. Right. So for all intents and purposes, that is the entire supply of Bitcoin. So this next 10 years with institutional demand and the halvings just making it, less and less, coming onto the market, like this is the gold rush. This is the Bitcoin gold rush that we have just entered into. Right. The moment that ETF was approved, we entered into the Bitcoin gold rush.
I think you're right. Because again, you got to go back to its supply and demand economics. So if you look at it, we have a lot of people just hold Bitcoin, like they're never selling it. It's in their wallet. They're just not touching it. The sailors of the world, right? And then you have the exchanges, right? This is where, or over the counter desks, where these institutions are buying crypto. And as that supply gets smaller, there's less liquidity essentially. The more demand for buying there is, the faster it pushes up price. And so even though Bitcoin's a huge asset already and there's a ton of liquidity, as it shrinks on these over-the-counter desks and on exchanges, even a small amount of buying demand will push up the price like more than you would expect. And so cutting the supply coming onto the market, maybe it hasn't had an impact yet, but again, as these desks get drained, boom, it was less. Suddenly it's going to get more volatile and it's going to push that price to the upside. But on the counter side, it would also push it down quicker. So the less liquidity when they're selling, it's going to be more volatile to the downside too. So yeah, I think you're right. But going back to our original question, was $62,000 Bitcoin the bottom of this dip? Or are we going lower? I think my take is like if we did go lower, I just don't see us going lower than 50,000. Like at the very, very bare, like the worst case, 50,000. And I think a lot of people, you had like the capos of the world or whatever, that like they sold super early because they looked at the chart. They're basically playing this analog game where they're saying the 4-year cycle is going to repeat exactly the same. Last time, between February and March, we saw this huge dip of the price of all crypto. So they wanted to sell early before that dip happened. They thought they were a genius calling it. And they made a huge mistake. And the huge mistake was, for one, that dip came right alongside the announcement of COVID. So it happened in the stocks too. So like everything dipped. And it was like, oh, COVID lockdowns, this, the time people were like, this disease is going to wipe out humanity. Apocalypse is happening. People were going crazy. And, so massive sell-off in the markets. Secondly, the mistake that they made was they didn't look at the fact that all these inflows for the ETF, it's like huge buying demand. And those two things caused a lot of people, they sold at like 40,000 Bitcoin and went all the way up to 73 at the height. And I think those same things are going to keep Bitcoin above. I think there's probably a 80% chance it stays above 62,000. We don't dip below that. And worst case, 50,000. But long term, over the next, by end of year, we're like well over 70,000 sustained and going much, much higher.
Didn't we see a 8K candle the other day? It was on Binance or something. There was one gigantic candle that went to like 8K for some reason. It was immediately shot back up. And then there was one that went over 100K. I'm not sure about the one over 100K, but there was some giant candle down that happened for something. Oh, I know what you're talking about. Yeah, it was one of the exchanges. It was down, a big dip down. It went all the way down to $10,000 per Bitcoin. Yeah. And someone was joking about orders it. Yeah, they were like, I told you it was going to 10K.
No, but there was some dude that like at 10K had like buy orders from like years ago, just like stacked, and just he filled them. So, yeah. But okay, moving on. So with 60,000 Bitcoin, kind of consensus is, maybe it breaks, maybe not. time's running out, and I think all three of us agree, though, by end of year, Bitcoin's going much, much higher than we've hit already.
Absolutely.
Yeah.
Yep.
Absolutely.
Yeah. Yeah. So, I mean, I think kind of the people trying to time it are kind of dumb. To be honest, like, I know there's people that do day trading and stuff like that. It's not really what I'm talking about, but there is this weird swing traders that like, they like to say, oh, it's going to go lower. They'll sell everything right now, and they'll buy back in the future. And it's just such a dangerous game because you get wrecked. Like, eventually you for sure lose this game. Like, maybe this time, even if they were right, they timed it at the right time. Next time they go to do it, maybe they're wrong and they miss this parabolic run up, which is like, that's when the most money in crypto is made in these 4-year cycles during like a small like 2-month period, and it just comes out of nowhere, and it just like it rips, and people don't expect it, and that's when like suddenly retail's jumping in, throwing a bunch of money in, and like I think what you said, I like what you said, Nick, which is like this is like the super halving, because we're just going to see so much more demand from institutions because they're going to get they're going to get crazy with like what do you think is going to happen to them mentally when we hit a parabolic rally? They're used to like 6% annually. These guys are going to like wet themselves and be like, what is happening? Think they're geniuses. We'll probably convert a bunch more Michael Saylors. Like we'll be like suddenly have all these like institutional Michael Saylors all over the place being like, oh my gosh, crypto's the future.
Mm-hmm. Yeah, I mean, it's interesting is because I was like talking to my family about this, of course. I try to get everybody into crypto around me, because after seeing multiple cycles, and my family's a little bit more open now that I'm actually like working in the space. So I told my dad about it. So he went and was able to get, some like a distributed fund, through Fidelity, which was just like multiple different types of crypto. And, it ended up from Thanksgiving, like going up like 80%. I think he only bought like, a couple shares of it. I don't know how much, like they were maybe $100 a share or something. And he's like, oh, wow, man, I really wish I had gotten some more of that, And so I think we're going to see that with these ETFs, right? Like individuals that have bought into Bitcoin, if we do see some parabolic runs, right? Like what is that going to do to the minds of this new community of retail?
Yeah, or again, institutional investors are people too, and they're literally just as stupid as retail most of the time. Like, I mean, they fall for the same like behavioral like traps where they're not as stupid, but what I mean is like they're susceptible to greed and fear in the same way, and they make a lot of the same mistakes. And so I think what's going to happen is Bitcoin is going to have this epic run. We're going to go past 100K. And it depends how good that run is, but I think there's a lot of institutions that feel like they're left on the sidelines. And I think what will happen is when the ETH ETF hits, it's just going to be the classic trade, right? Like people miss out on ETH, they're out buying Solana right now, right? People that miss out on Solana are going to buy something else. And so I think the people that are missing out on the Bitcoin ETF from the institution's perspective, they're going to be looking at the ETH ETF and being like, oh, this is my play. I'm going to jump into this. I'm going to be buying this, and we're going to see kind of a revenge rally for those people that kind of got left on the sidelines for the Bitcoin ETF. And maybe we're feeling a little more bearish or having a reality check right now.
No, absolutely. I think it'll be very interesting to watch how the behavior of the market plays out this time comparatively, to other times with this institutional demand and the reduction in supply.
Let's talk about the debt box scandal. Are you guys up to speed on that?
You say dead box? Dead box scandal?
Debt box. Yeah, debt box.
Mm-hmm. I haven't heard of this.
Ooh. This is crazy. Okay.
What is going on?
So the SEC went after this company called Debtbox. They're a crypto company, obviously, and they basically destroyed this company, a bunch of institutional or a bunch of investor capital, but they did it by getting this court order and I think shutting down their banks or something, or something like they seized assets or some weird thing. I don't know exactly the details. Well, it came out later that the SEC had basically straight up lied about the facts of the case to get this company shut down. So they went to a judge, they made up stuff, and they got the company shut down.
I think I did hear about that. I think I did hear about that actually.
Yeah, they got sanctioned by the court. So here's some interesting takes according to Meta Lawman on Twitter. He says, the judge documented numerous instances of false statements by the SEC lawyers and staff. A federal judge appointed by President Obama found that the SEC lied repeatedly in a secret legal proceeding with no notice to the defendants. The SEC's lies persuaded the judge to issue a temporary restraining order that effectively destroyed an American business. The judge made it clear that the SEC lawyers did not make an error. they lied intentionally. The judge found a pattern of bad faith permeating the SEC. And based on numerous other court rulings, it appears that the pattern of bad faith expresses itself most in enforcement actions the SEC brings against people attempting to participate in the nascent blockchain and digital asset industry. The pervasive misconduct exhibited demonstrates a pattern of organized bad faith and broadly implicates the commission itself, not just isolated individuals. And this is a quote from the court. The critical evidence the commission offered to obtain and defend the ex parte TRO lacked any basis in fact. Yet the commission nonetheless advanced the evidence in deliberately false and misleading ways. And then the judge found that the SEC engaged in a gross abuse of power entrusted to it by Congress. So, yeah, what do you guys think about that? And what do you think about the fact that the SEC can't even be held liable for this? Like, the company's destroyed. The investors lost all their cap. I actually know somebody who had money in that box and they lost everything. And the SEC has immunity from it, not liable. And even though they outright lied about it.
That's criminal, man. Like it's everything that we know is going on with them. Like from seeing Gary Gensler himself turn an about face, right? From going and teaching at MIT to what he's saying now, right? There's clearly something deeper going on with everything. And the fact they can destroy a company when the whole basis for their argument on what they're doing with crypto and how they're restricting it, and even after they approved the Bitcoin ETF, they say, they try to scare independent financial advisors because they say on the basis of protecting investors, when they'll go out and destroy people just for their own mission.
What do you think, Nick?
Yeah, I mean, I can't comment too much on stuff like this, regarding this topic, but I will say that there are a lot of really good faith actors that are coming together and trying to work together and getting there to be proper regulation pushed forward to be able to have these guidelines that whatever company that's coming in that wants to do it properly is able to follow, right? So that they can have this clear path forward.
What are you talking about? The SEC's trying to do that?
No, so like Coinbase, the companies working within this industry, right? Are they know the industry, they know the space, fighting. They're coming out and they're saying, hey, like this is what would make sense to be able to have like this like clear pathway for any new companies that would like to enter. Like a regulatory framework.
This is Miles Jennings on Twitter. He says, recent events have changed my mind about working with former SEC crypto enforcement lawyers. Anyone still working in the division is complicit in the ongoing abuses of power. Debtbox won't be the last example. We won't work with the law firms that one day hire these people. And I think he works at A16Z. If I'm right, they got like over 500,000 views. And I kind of agree with that. I'm like, you know what? We need to start stepping up the game. And if the government won't hold these people accountable, then like good luck getting those cushy jobs after the SEC if you want to, be a part of this nonsense, because the courts, the U.S. court system said, hey, you guys this is a gross abuse of power, of your power entrusted by Congress. And you're deliberately, you are advanced that evidence in deliberately false and misleading ways. Like they just outright lied about stuff so you could get what you wanted. And that's not okay. Like we shouldn't be doing that. Like you guys should be the good guys. Can you guys imagine if the SEC did their job and like stopped FTX and think of all the crypto scams, like actually stopped and like put a stop to the people that were scamming people instead of attacking like Coinbase and Kraken and all these good companies that are doing the right thing.
Do you guys have
this election?
Do you guys have the numbers on how many Americans hold cryptocurrency?
No, do you? Do you just pull it up?
Let me see. I think
pull that thing
it's
up.
like over,
Look at,
it's over 50 million, I
crypto.com.
believe. It says that 40% of American adults now own crypto, up from 30% in 2023. This could be as many as 93 million people. And then among current crypto owners, around 63% hope to obtain more cryptocurrency over the next year.
Music to my ears. But also, as the price goes up, more people will jump in. Like, man, it's going to be interesting because elections in November. I think by November, the price is going to be skyrocketing. Everyone's going to love crypto, and they're going to tune into all the crypto news. And everyone in the crypto doesn't like Gary and a lot of these, Democrats who have attacked crypto. Yeah, I think there's a good chance we like shake this election up in a way that people don't expect. And it's going to be it's going to be interesting. But I hope it plays out the way I'm hoping because we need some pro crypto candidates. There's some good people on the Democrats, and there's some, but it seems like right now the Republicans are more pro crypto for whatever reason. And yeah, we'll see. We'll see what happens.
What's interesting is like, it reminds me of like the development of a meme coin, right? Like when you watch it, like there's like some meme coins where like they go up, and they have that initial pump, and then it crashes. But they still have all of those people that were holders, right? Maybe that they had like a pretty decent holder count. So then when it has its next rally, right, all of those people flood back in because they already have this like, oh, I was already a part of that, right? Like, I know it, like, let me get back in. So it makes me think like, now we're in a place where we have the largest amount of holders and past holders ever. So this next, like that little 2-month period that you talked about where things go really crazy, it's like, man, it's going to be big.
It's going to be huge, huge. Okay, so moving topics. Okay. Question of the century that everyone asks every day on Twitter. And I ask multiple times a day to myself, is retail here yet, or are they not?
Jesse's in love with retail. He just thinks about them all day and night. He dreams about retail.
Where are they? I do. Who do you think is coming to the rescue to bump these things? It's retail.
Yeah. Well, I talked to last week on some of my options on Robinhood, where I bought these essentially as a retail indicator, like these call options for June and January of 25. And doing great, by the way. That Robinhood stock keeps running. And I said the volumes were up 10% in February, right? That's what the CEO reported.
Whoa, that's really interesting. Okay, wait, because you said 10%. Mm-hmm. I did a poll on YouTube. YouTube's kind of like a little retail hub for crypto, okay? Crypto retail, they hang out on YouTube. They hang out on TikTok. They don't really touch the podcasts. And some of them go on Twitter, but mostly YouTube and TikTok. I did a poll on YouTube. 2,400 people. That's 2,400 people that don't know how to count or do math. It's a lot of people, okay? I ran a poll. I said, when did you get into crypto? And, it was interesting because you said 10%. 10%. What I got was in the last 30 days since Bitcoin broke its new all-time high, 9% of the people polled said they'd gotten in during that period. 9%. So you said it's up 10%. I got 9%. That sounds about right.
Are we building some metrics here? Did we crack the case? But there's actually so I looked more into it following the conversation last week, because that's just Robinhood, and it's only retail. So I wanted to measure it like against Coinbase volumes. And
Coinboy.
Coinbase volumes. And there, I expected a larger rise in institutional volumes versus retail, but the retail was actually up significantly, but it's quarter over quarter rather than month over month. It was 160% from third to fourth quarter, and these numbers were reported a month ago. In retail trading, with a 92% rise in institutional. But as a whole of their volume, during the last bull run in 2020 and 2021, the retail made up between 28 to 40%, depending on which quarter it was, and it had risen from 14, I think, to 19 up to the fourth quarter. So those numbers are still very low, but they're higher than I thought they would be at this point. Honestly, I don't know what you guys think of that.
I mean, I don't think that retail will come back until there's millionaires that are being made from meme coins, right? And I don't think we're quite there yet. Maybe there might be a couple here and there. We're starting to see some with some Solana meme coins. People are really starting to do really well. Like we saw Dog with Hat. I think we might have seen a couple millionaires from that, right? But I think until we see that, or we really see Bitcoin, I would say probably go past 100K. Is when we'll really start to see retail just start flooding in.
Yeah, so I kind of gave this take last week, and I'll give it again, which is I think the reason Coinbase went down and is going up the App Store has nothing to do with retail jumping in. And it literally is just everyone's checking to see, oh, shoot, did I still hold some crypto? And if I did, what is it worth? And that is all. That's all they're doing. I don't think they're buying. in size. I think 10%, sounds about right. And it doesn't matter if it was 99% at this point of retail like paying attention, because even if they were paying attention, I don't think they're buying in size yet. Because the very things you mentioned. Like if they're buying, they're doing like little itty bitty buys. They're like dipping their little toes in and they're like, cool, kind of like your dad's like, oh, here's a couple $100 I'm going to throw in, see what happens. And they're like, wow, I wish I'd have thrown in more. And that's all that you're seeing right now. We're not at the point that people are like, I'm throwing my life savings in, because that will happen. We're not at the point that people are like, I'm maxing out my credit card and I'm taking out a loan against my mortgage to put it into crypto. That hasn't happened. To get to that point, one really, really important thing has to happen is that people have to believe that it is only going to go up from here. And people don't believe that right now. They actually, I think the vast majority of people, especially not in the space, think that Bitcoin's at its all-time high and it's going to crash from here. And, I don't think they're thinking, oh, cool, broke its all-time high. It's going to run up to $200,000. They haven't gotten that belief yet, but they will. They will, because Bitcoin is going to keep going up, and they're going to be like, wow, I watched this thing march from $16,000 all the way up to $100,000. It's still going higher. Now Michael Saylor is saying it's going to $20 million or some crazy thing. Their neighbor's saying this, some kid that's 12 made a meme coin called Bing Bang, and now he's a multi-billionaire. Like, crazy stuff's happening, and they're like, what is wrong with my life? Why am I sitting over here working at, my 9-to-5 job making $40K a year when people are getting $50,000 airdrops or whatever? And then they start going in with some size. They're like, I'm doing this. I'm committing to this. I'm going to make some magic happen with, on Coinbase and all these places. And so when that sentiment permeates culture, it's going to be contagious. People are going to be like drunk on like power and money and up only. And I want to hear on Twitter like the natural, like the wide consensus be like, hey, now the institutions are here, it's up only, baby. Like, we're never going down again. There is no 4-year cycle. It's called the 40-year cycle, and we're just going up only. This is adoption phase. When I start hearing that kind of stuff, I'm going to start tingling, because we are going to parabolic up, whoosh, up to the moon. It's going to be crazy. People are going to lose their minds, and it's going to be a beautiful sight to behold. So yeah.
Yeah, I think like thinking about it, we always talk about like, oh, when is the super cycle? Right. And I think like, we have a very good chance for this to be the one, because I feel like last cycle, there was a lot of, buzzwords that were going around. Right. And I think like, like metaverse and like gaming, like all of these things that were going to bring adoption. But now we have real adoption that has come. Right. Like we have institutional adoption, while at the same time, having a supply shock that is coming. So, and, we are seeing gaming that has been taking off. Like there's all these different things that could create the perfect storm for there to be real adoption. Right. So it's like this run and this rally that we could see really could melt faces to where it's like, 100K is nothing, for Bitcoin. And then everybody's just going to be piling in. There's so many strong indicators and use cases, for this next rally to be able to point to that can really convince retail, I think.
So as far as super cycle, I think everyone's going to believe it. I don't believe in it myself, though. And the reason is, well, okay, you could say we're in a super cycle. You could say that. That's fine, because we do kind of go up only. The problem is we're going to go too high. We're going to be like Icarus. We're going to fly too high to the sun. People are going to pump this thing too high with leverage. And when you pump up, something with leverage, we get to astronomical numbers. So I'm talking, I have a firm belief there's going to be multiple tokens. They're going to be in between the 100 billion and 500 billion range. So I think we might even see Solana hit 500 billion. Like that's not out of the cards. But I think ETH will be at like a trillion. You know what I mean? Like ETH goes to a trillion. Maybe Solana, maybe it's an AI token. Could be an AI token hits 500 billion. Could be Polygon hits 500 billion. That's what that is, like, my ultra crazy psycho case, but I think it could happen. Or it could be a gaming token hits. So it's a blockchain, AI token, gaming token, somewhere between 100 billion and 500 billion. Now, should those things hit that high? No, they shouldn't. That's absurd. But that's going to be the height of the froth, right? And that's got to come back down to reality. We got to see some reality hit at some point, you know? If we got BitTensor going to 500 billion, that doesn't make no sense. That shouldn't be there. And so it's got to come back down to reality. Got to get a reality check. That's leveraged up. And so that's where the crash comes from. And then it gets back to healthy. And so if you look at maybe the healthy numbers, yeah, those are up only. Those are the super cycle. But on a chart, it's not going to look like that. It's going to wick way up, parabolic, and then crash back down. It's going to happen the same way but everyone's going to be saying exactly what you just said, like a super cycle's here, institutional adoption, it's never going back down. And that because they believe that, that's why it's going to go back down. As soon as they believe it's never going down, they do stupid stuff. And when they do stupid stuff, it's going down.
What do you think is the chances that we like this is, because everyone's always compared it, or so many people have compared it for years to the like .com, right? The progression of the internet, right? What are the chances this cycle is like 1999, right? Like, and we have like an elongated bear market. Like we hit like global, everyone's in this. There's publicly traded like stocks that are crypto, right? Which we're there, right? This hits everyone kind of FOMO, and at least everyone with a bad taste eventually. And we hit this elongated thing until, you know, whatever, tech took like 10, 15 years to really come back from that and be like a monster again. Like, well, what do you think are the chances of something like that happening? I know we have this like long cycle math, but we're in a new game.
Yeah, you know, I think, look, I think speculation, you know, like you're talking about, is very important for adoption of technology, right? And I think this last cycle that we were in, you know, when DeFi was invented, right? I think that was like really major for us to be able to have this speculation that attracted enough individuals to build infrastructure, right? And I don't know if this next like cycle is going to be enough to really bring like major adoption to everyone in the world, right? But I think that this could be that next speculation event to where it gets into the mind share of enough people to where we get even more people and, you know, investment from venture capital and, you know, infrastructure builders that come and really start to build it out even further, right? So I think that this could be the one that leads to the major adoption.
My take is I think I'm with both you guys. I actually do think this could be our 1999 moment. I think this is like the mega, like when they write history books about the most epic crypto crash and like bubble of all time, it could be this cycle. I think there's a chance. We got institutions on board, but I think more importantly, we finally got to a point that like crypto is like decently easy enough to use. If you think about last cycle, it was actually really hard to use. Like 2 cycles ago, doing something on chain, psycho. It was so difficult. Like nobody did it. Last cycle, people did it, but it was, it was brutal. It was not easy. This cycle, we have made some decent improvements to make it, I think, just easy enough that we're going to see more people do it. A lot of people learned it last cycle and are going to be, you know, a little bit more used to it. And I think we might have built the infrastructure for people to be able to kind of onboard into, you know, on chain and make these things happen. And so I think there is a chance this could be our 1999 moment where we just see things, because especially when you couple in AI, that's where I just keep losing my mind, because I'm like, think about this. I want to paint a little picture for you guys, a little beautiful picture for the both of you. People want to be in AI. They really do. But do they want to buy NVIDIA, like whatever multi-trillion-dollar market cap? No, they don't want that. They want to buy a small AI startup and make bajillions of dollars, okay? They can't do that. It's just not, there's not possibilities, okay? But in crypto, they can meme it. And what I mean by meme it is like, we know it's a meme, but I feel like most of retail won't. They'll look at some AI crypto project, they'll be like, oh, I've always wanted exposure to AI because I know that's super smart and sci-fi. And they'll see some crypto AI token and be like, I'm buying that thing because, you know, that's my chance to get early in the AI run up. So I think we could see some just nuts stuff. Like I'll give it like a 10% chance. This is going to sound insane. This is literally going to sound so insane. I'll give a 10% chance that we have an AI crypto pass $1 trillion. As stupid as that sounds, again, there's a pent-up demand of people wanting to buy AI stuff because we've seen enough sci-fi movies to know, you know, that sounds like a good idea investing-wise. And there's small enough cryptos that, like, you pair the two together and people are going to do dumb stuff. They took Doge to $80 billion. I think they could take an eye at
Dog with AI?
Dog with
Are we gonna launch it?
The path to $1 trillion, baby.
Dog with AI.
What happened? Because what is that insane number that Sam Altman wants to raise?
7 trillion. I think that was a joke or like something like that. I don't know. But yeah, Wall Street's kind of like having their little AI's having its bubble at the same time crypto's going into its little bubble season. So I think kind of pair the two and we might get some crazy stuff where
boomers are going to be losing their minds.
Dude, they are.
Crypto AI.
Yeah, man. I'm every time I see a decent crypto AI project, I buy that thing. I got some backs. I got some good backs of good stuff. Bullish on a couple things.
I wonder how many people this cycle, because I brought up like Robinhood and Coinbase stats. I wonder, you talking about the advancement of the on-chain stuff. I wonder how many people this cycle just circumvent those things, right? Like they go straight to like they have a phantom wallet. Like they go from not into crypto to just they're aping meme tokens because their boy is doing it, and they just downloads an app, he sends them some soul, and he's off. Rather than going through the whole process, which many of us did. I spent, my first couple of years in crypto by myself, just hyping on Bitcoin before I touched anything else. And I don't know. I'm not even sure what kind of impact that would have on the space.
I think the people that are retail that are jumping in the space are doing meme coins. I don't think a lot of them are buying normal assets. I think they're like going straight to meme coins. I think they'll get bored of it eventually, but if you think about it, like from their perspective, if they really think Bitcoin's going to crash, well, they're not going to buy all the normal real stuff. But like meme coins start at zero. Like they're early every day they wake up and buy one. You know what I mean? So for them, it's just like a fun gambling game. I just think most people get burned out because like most people lose at it. It's not easy to win at the meme coin game, even if you're really good at it. It really is kind of like a big insiders club. There's a lot of guys, a lot of influencers that just like pump their own bags over and over and over again. And retail's got to figure that out and get to the point like, okay, this is stupid. I'm literally just giving my money to like whatever influencer who keeps pumping these like $20,000, meme coins. And I'd rather invest in something that's going to give me some long-term potential. I think we'll have a rotation out of this season soon enough. Once again, like you said, Nick, once we hit that whatever that level is, that retail finally like opens their eyes and is like, Bitcoin's going up higher, and I want that.
I need this. What do you guys think? What do you guys think about like the onboarding is so much easier this cycle, and the user experience is so much better than it ever has been. Like, how do you think that will influence adoption or people entering the market?
Yeah, I think improving the mobile experience for crypto is going to be a big leap forward, because even still, whenever I meet somebody that's like retail investor, they're literally always doing stuff on their phone. I'm like, why are you trying to buy that on your phone? I don't even know how to use MetaMask on my phone. I've never literally done it.
It's terrible. It's terrible using your phone.
But yeah, that's how most people do it. So yeah, improving that's going to make it a lot easier. And then crazy stuff's going to happen. People are going to be buying stuff like at work. They're going to be like, do a 2-click button. Just bought my Bananagram face melter token, and it's a going up only. All right. Well, okay. Hey, so we're talking about this kind of like, retail coming, everything going up. We all get fabulously wealthy, but it doesn't matter. It doesn't matter. So, you, me, Nick, we make $100 million, whatever. Okay. On paper. You know what's going to happen? You know what happens to most people?
In a bad month. In a bad month.
You know what happens to even the best of us? We make $100 million. But by the end of the cycle, we're left with less than we started with, because crypto,
in a good month,
crypto has a good way of just taking those gains back. So you got to know when the top is, and you got to know when to sell. So my question is, what are your guys' list of top signals? What top signals are you like, I'm going to live and die by these things this cycle? When this thing happens, I'm selling everything.
I mean, for me, it's not necessarily looking for top cycles or top signals. It's just trying to get as much out as I can while I can, and then being sure to set some aside, as I'm doing it throughout like this next up cycle. But beyond that, like, I just want to be able to accumulate USD to be prepared for the next dip.
What about you, Harley?
Yeah, I sold quite a bit. Like actually, one of my biggest gainer was like a complete Ponzi project, which had a daily ROI attached to it, and so it like kind of like I guess you could compound it, but I was selling as much as I could just because it was like basically a rebase kind of thing. But where I messed up was I didn't take those profits to the bank unless it was for like a one-off thing. Unless I want to go to France with my family, so I was like, all right, we're taking the Ponzi cash and we're going on a trip. But most of it I took, and then I slowly pissed it away on very stupid things. Right, portfolio is still bigger, but like you're saying, like I did not capitalize as much as I should have. So to me, this cycle is 60% of anything I sell goes to the bank. Right, I'm going to keep rolling funds around because I'm a degenerate. So some of it has to stay because I need to keep going. But as far as selling, I haven't worked out when that time is. I think it's a DCA out kind of thing. Which if you look at my portfolio, like last time, just my Bitcoin, like you see sell at 16K, I sell at like 30K, I sell at 40K, I sell at 50K, and then a buy at 45K, and that's all I did. Right, that was the last of it. So if I did like that with all my projects, if I set like, hey, at 5X, I'm going to take half my money, I think that's how I would have to do it. But to your original question on top signals, how I'd figure that out, I think it's different for project to project, but for the overall market, I think it's different than last time because I think it's already so well known, so talked about. People have seen it make a couple returns, so I don't think like people I know have already asking me about crypto, but they're not like suggesting. So when they start suggesting me things, I think that's one smaller signal. But I think Nick, you mentioned this earlier about people from previous cycles. I was at a bar with my crypto buddy, and we started talking to a couple, and they asked us what we do. So well, we were crypto, and they're like, "Oh, I bought crypto and it didn't work out." So one had bought Sol near the top, one had bought Link near the top, and they were still interested. I could tell in the conversation. And when people like that, I had a coworker who did the same thing with ETH. When those people get to that point, some of them will sell because many of them tell me like, "Oh, I just want to get back to break even," and I'm selling. Once we get past that, the people who are staying back for that hype, I think that we're getting to the next level of close to the top. So that's like a pre-top indicator for me.
That makes sense.
I like that you said that when people are suggesting tokens like they shouldn't be, I think that's a big top signal because I remember at the end of the cycle, I had so many friends that they shouldn't have been doing crypto at all. Like they were not like they'd never been in it before, and they're like telling me about things that they heard about that they got into that I should get into. That was like totally garbage project that they had made a ton of money on. And, I think that's a top signal. For me, my top signals start in 2025. So I'm not selling before 2025. I don't care what happens. There's definitely some things I guess that could happen. But for the most part, not selling before 2025. 2025, I'm going to be taking a really close look because I don't know when in 2025 to sell exactly. But I think there's a certain frothiness you can feel in the market. And it's not like the meme coin mania that came out of nowhere this cycle. It wasn't, you didn't see it like relate to anything else. It was its own little bubble. And you could tell, right? Like it's not the whole market did that. It was just one little sector was in a bubble and everyone could tell that. We need the whole thing to be in a bubble. I need everything going up. I need NFTs and crypto and everything. As long as the majority are going up and to an insane degree, I think that's more your frothiness signal, not just one sector. Okay, my other top signal is going to be kind of what I just said, which is when I have people that shouldn't be involved in crypto that are constantly talking about crypto, that is an issue. And when I have people tell me, hey, my neighbor told me to buy this because they like tripled their money. When average people are taking out debt to buy crypto, that was a huge top signal last cycle. I knew some guys, they just normal dudes took out like maxed their credit cards and took out some loans to invest into some Ponzi projects. Did not end well for them. And as soon as I heard that, I was like, I literally talked to somebody. I was like, man, that's a sell signal, huh? And then we laughed about it, but we didn't sell. And crypto crashed hard like a month later. And so those things, Coinbase, like trending number one, that's one everyone knows. there's like the pi cycle top indicator. If you guys ever seen that, it's on the website Look Into Bitcoin. Whenever those two lines cross, I think every single time crypto's crashed, every single time that's ever happened. So
what was that one called?
Pi cycle top indicator. It's on the site Look Into Bitcoin. So there's that one. And then overall, I feel like there's almost this abstract feeling. You can almost feel when people are just gleefully greedy, and you just get the sense that something's very wrong because everything's too perfect, and it's kind of eerie, and you almost feel like you're in a movie. You're like, wait a minute, I'm in the Matrix or something, because things are too good. Things are way too good, and I think that's the point. But my gut tells me it's maybe summer 2025, winter 2025, somewhere in there. That's our sell period. Just got to keep an eye on how things are going, where things are at. But I think that's it.
I know. I'm looking at the Pi cycle top indicator, and it looks like the lines are touching, but I'm not sure if I'm reading this chart right. Is it over, Jesse?
Oh,
is this the end?
We just indicated.
I would think not, because
we crashed the markets right here. You watched it, folks.
It goes viral.
I haven't looked at it in a while.
I was reading it wrong. I was reading
the
the green line touching the chart, but you're talking about the orange and the green lines.
orange and the green line making babies. When that happens, you want to, that's a top indicator. So, well. Okay, all right, moving on. Your guys' top signals suck. You guys need to come back next week with a better list of top signals. You guys are gonna get like your bags handed to you, because you do need something to like wake you up, because you get too greedy when you're making that much money that you forget these things. It's almost like you get into this magical little realm. Little unicorns are jumping around, and it's just, you kind of forget all your problems, all your worries. You're like, why worry? Then that thing crashes. Here's one thing that I heard. It was advice. I think it's good advice, which is every time you think it's the top, every time you think, wow, this must be the top, sell a third of your portfolio. You might not nail it, but it's a good way to kind of take some risk off the table when you think like this is the de facto top of the market. Some point in 2025, you're sitting there, you're like, this is the top. This feels like top. Sell third. And then, if it's not the top, your other 2/3 right up. And then, this is top again, sell third. And odds are your first one's going to be probably a little bit early. Your second one's going to be perfect. And your third one's going to be a little bit late. But overall, you're going to do a lot better than everyone else does.
I just thought of an indicator, actually, for a personal indicator. It's like the amount of YouTube content I'm watching on crypto. I think it's like I'll get to a point in the cycle where I'll just listen in euphoria, right? Like Michael Saylor's voice is so grating during the bear market and so annoying to listen to, but then you listen to it in the bull market, you're like, yes, this is amazing. Like I love this. This is all going my way. So I think the higher the price goes, I tend to delve more into the bubble.
Yeah.
Right. Like, cause you're getting that, like I said, the bath of dopamine. It's only half kidding, right? You're getting those dopamine hits by seeing the price go up, and you're getting this the bubble. Not self-fulfilling. Like this cycle where it's just saying it's going to keep going up. It keeps going up, and it's great. Right. So I think when I'm fully immersed in that, that's when I've got to pull the plug, take the red pill and get out of there.
Here's what we're going to do. We're going to have our own set of top signals. We're going to write down a list, and we're going to check them when we do these podcasts every week. We're going to check them. We're going to be like, okay, have we hit any of them? And then we'll discuss from there. So I'm going to pull up a list for you guys, and that way we're not going to miss it. We're going to hit it. We're going to nail it so hard. People are going to they'll write stories about us. They'll be legends. They'll be like, yeah, those guys, they nailed it. They nailed it to the day. I got the bottom. I was a week away from the bottom. Almost de facto. I had a meeting in OC. Literally, we had this big call. Nobody believed me, man. But I was getting so many hecklers, and I was like, you know what? No, this is it. I could feel it. Who's gonna sell? Who's gonna sell after this? There's nobody left to sell. And it was less than a week, man. I went all in.
I remember that call.
Yeah, you do.
I remember that call. I was on the call with you. I was like, I was like, nah, I think you can go a couple K lower, and you're like, nah, it can't go any lower. So
you're wrong.
You did call it.
There was a third of the people that just kept saying it's a bull trap. It's a bull trap. It's a bull trap. And I was like, no, it's not. And you watch. It was legendary. I want to do that on the top, man. I want a one cycle where I get boom, nail the bottom, nail the top, and then move to some cool place and go live out the dream. All right, next question.
Yeah.
Oh,
it was interesting watching people saying, "Oh no, we can go lower," and it was just all people that had not prepared properly for this bear market, and they were just like kind of like hoping for more time.
Man,
it did catch you with your pants down.
My pants were up, buttoned, and I had my belt on, my like Batman utility belt. So
called me with my pants down. My pants were still. I mean, I held on to my stuff. I didn't like the stuff that I had left, unless it was like complete Ponzi trash. I didn't like dump it in the bear market. I held on to it. I did acquire some more stuff, but you get there, it starts pumping. Like, oh, I didn't do enough. Like that's what I felt like. I felt like I didn't do enough.
I did feel like that. So like over the year, even though I was like 100% exposure to crypto, I always felt like I was like a little bit late to like maybe moving out the risk curve. So because I started pretty much primarily in ETH, and then I allocated into like riskier alts over time. And I think I was like about a month behind what would have been ideal. And so I think, next cycle, I'll try to move out a little bit quicker, be a little bit more risk adverse. That was my main lesson learned is should have gone a little bit quicker, but man, I'm not complaining. I've done so well. There's so many people that aren't even in crypto yet, man. And the ones that are in it, like they share their big wins of like, oh, I made a bunch of money on this meme coin or whatever. But it was a lot with like, 1% of their capital, or they did $100 in it. Players with size, there's very few that rode it all the way from the bottom. And, it's going to be great. Still early days. People jumping in today are early, I think.
Still early.
All right. This question comes from Zola. He says, how will investment banks trade their ETF holdings? Will they look to rotate from Bitcoin ETF when market cycle tops out, like we all do, or are they like everyone else, or are they holding for longer terms? I've spoken with a couple of friends in IBs, don't know what that is, and they talk about capital rotation, but how quickly can they move? Just thinking all this buying pressure is great on the way up, but will it fall 3 times harder if they begin selling in heavy clips on the way down? So I don't know what IBs is, but I'm guessing like
investment banks.
Oh, investment banks. Okay, so what do you guys think? Like, are we going to write it up and write it down?
Man, I mean, I think probably we can look at, an indication of this is looking at, maybe what some large investors of Bitcoin have done, like Elon, to see maybe what kind of behavior some of these investment banks might take. Like if it does dip, would they sell to take those losses and then just buy right back in, right? So, I think, we have seen some similar behavior to that. Like, at the end of the year where everybody takes losses, like maybe investment banks would do the same, depending and just hold if they were in profit. So I'm not sure. I mean, if you look at it, like I always hear that Bitcoin's the best performing asset over the last 10 years. Right. So it's like, it makes sense that they would just want to hold. But, my thinking is, maybe they would sell just to take those losses and get it onto their sheets. If they are, in the red.
But I mean, that could happen with the same way we talked about with like the .com bubble, right? Maybe they do that, like they realize things aren't worth anything, or maybe it's just like any other asset. I think we're so used to seeing significant crashes in crypto that we're like, if people sell, it's going to destroy us, right? But you look at investment banks invest largely in other things, right? NVIDIA, like what have you. And they rotate out of those without crashing it necessarily, right? Like just because they've rotated out doesn't mean it's necessarily the end. I think a lot of this cycle can be about this asset maturing to the point where you can have large buyers moving in and out without destroying the asset, right? I think that's a point of maturity. So I think it's about if we get to the point where that happens, because the last cycle, it was like the interest rates and the Ponzi's coming down. All this stuff just destroyed us, right? Destroyed us. So if we don't get a big catalyst like that, I think people rotating out and other people rotating in, unless they're all like one black swan event where everyone has to get out and everything's destroyed. I think the maturation to an asset of that level, it should just work like any other stock or asset.
So I actually think it's bullish for anyone that's not an institution because, like, Nick, you said it really well. Look at what Elon Musk did, or look at what Facebook and all these companies did. What they did was they bought on the way up. They pushed these things up on the way up, right? And then they sold like kind of near the bottom. Like, look at Facebook shut off its like NFT program like near the bottom of the market. These Elon sold, I think, near the bottom of the market. So what will happen is like they're gonna buy all your bags on the way up, and then they're gonna give you time to sell, dump on them, and then they'll dump at the very, very bottom and give you the buying opportunity of the century to ride it all the way back. back up. So ultimately, I think it's going to actually hurt them more than like most like somewhat savvy players. But I think you're going to also have like the Michael Saylor types who just like buy and hold. They're buying for 10 years and they don't care what happens.
People in fiat, we call them poor.
You just called everybody poor.
All right, yeah, sorry. If it behaves the same as last time, and we get that crash, right? Even if the crash is only 50%, 40%, something like that, right? If we say normal winter, what is the narrative for next time, right? Like, we've reached the institutional level, right? We've reached like a little bit of nation states. If we get more nation states in this cycle, and it's not a super cycle, it doesn't become an established asset, it crashes 80%. What is the next level, the next narrative for the next cycle? Like, where does that come from?
Same narratives every time, man. The institutions are coming. That has literally been the narrative the last...
God's buying Bitcoin.
Literally in 2017, the narrative was the institutions are coming. 2021, the narrative was the institutions are coming. And then right now, the narrative is the institutions are coming. And the truth is, every time they were right, and they're going to continue being right. Because you're talking about, essentially, here's the ultimate narrative. There are trillions and trillions and trillions and trillions of dollars of assets in the world. Those assets are coming on-chain. And it's going to be a long 30-year cycle for this to happen. And every 4 years, you're going to see a burst in it. And that's the narrative for the next 30 years. So
did you see that BlackRock investing with Coinbase in that offshore company for the tokenization of securities?
Bro, you're like reading my notes because I was literally about to say it's official. This is GOT is doing nothing, and he says it's official. BlackRock tokenized fund, and it says a BlackRock announcement. It says BlackRock launches its first tokenized fund, Buildle, on the Ethereum network, which I think is hilarious because Buildle is like an ETH Denver meme thing that came out. And so they launched something on this tokenized fund on Ethereum. It's not going to be the last time you see it. You're going to see more and more things, and they probably are going to launch a lot of these things on Ethereum because that makes a lot of sense. If you're looking from an institutional maybe security standard, like you want kind of the oldest, longest, most secure network that's like, boring, right? Like Ethereum's kind of boring. It's a great place to put money, but they're not on the bleeding edge of innovation. They're not supposed to be. And so L2s are maybe a little bit more risky because they're a little bit more innovative. Solana, a little bit more innovative, pushing things forward, pushing the bounds, but that comes with risks. They want the least risky place they could put money. And that's going to be Ethereum. And but what's exciting, and I think people are fighting over like, oh, it's on Ethereum, or like, oh, that doesn't matter, whatever. Stop it. You know why? Because it's good for you. I don't care if you're in Solana or wherever you're at. Them putting money on Ethereum, injecting more liquidity into crypto, better for everyone. You're growing the great ocean of crypto. And when you grow the great ocean of crypto, it's going to bleed into Solana. Where do you think your Solana money came from? It came from Ethereum, Bitcoin, and all the people that came before you. And, it's going to keep bleeding over there.
So I just want to bring to your attention, a recent chain that was announced that will be launched with Polygon, the Polygon Chain Developer Kit, which is Libre. So I put a tweet into our group chat for you guys to check out if you want to check this out.
Libre is actually Spanish for porcupine.
Oh.
Yeah,
perfect.
So Libre, I am familiar with Libre. Libre is a Polygon chain. It's got hedge funds, Brevin Howard, and another one already putting assets on it. And so it's built custom specifically for institutional needs. And that is important for certain tokenization of assets because there's like things that you need to be kind of built for compliance standards that you couldn't get on a normal general purpose chain. So when I say the institutions are likely to put funds on Ethereum, the reason I say that is, again, highest level security, longest like kind of trust chain, right? Like you can look back and say, oh, for a long time this thing's been secure, and you know, the longer it's around, the more people trust it. But there is a reality that like there's just certain things they can't do on Ethereum because Ethereum's general purpose, and they need a really custom environment. And so Libre, that's what it's built for. And the cool thing about Libre is it's built as a part of Polygon's aggregation layer. And so I think at the start it's like sort of like a private chain. So you have to be like don't take my word on it, but I think you have to be like an institutional investor of some sort to like mess around with this thing. But I believe in the future, like over the next 5-10 years, you're going to see these things open up, and that liquidity that gets stored on these private chains is going to start breaking into these other ecosystems. So again, so bullish for crypto as a whole. The fact that they're even playing around with these things is exciting, and we're going to see a lot of things get tokenized.
Yeah. And just if you wouldn't mind, if I could just like read the first part of the tweet to kind of give us a good little overview of it. So the tokenization specific L2 chain Libre is live. So it's live now. So Libre Cap now delivers a compliant way for institutions to tokenize alternative assets while enabling on-chain access to performant funds like hedge funds from Brevin Howard and money market funds from BlackRock.
Yeah, man, the institutions are coming. They're coming. We're going to see so much innovation. It is so early. You guys are going to like... That's just whatever I just did. That's how you're going to feel.
I don't know if I'm ready. To be honest.
I don't know if anyone's ready, man. I don't know if anyone's ready. I don't know if anyone's bullish enough. I can see it. I just see the future, man. You see how bullish Larry Fink is? Larry, like, you have to understand, the Bitcoin ETF broke every freaking record they've ever had. These guys are just losing their minds over at BlackRock. They're probably having like just the biggest party ever because they're like, oh my gosh. Do you know what BlackRock does, you guys? I don't think people understand what Wall Street does as a whole. I'll tell you what Wall Street does. This is like their dirty little secret of what they do. They sell things. Wall Street sells things and they make money off the fees, okay? They don't care what they sell you. They don't care if you want to buy googly eyes. If you're like, man, I want googly eyes on pencils. If that was the hot thing to be traded, that's what they would trade in. They make money off the fees. That's where they make their money. That's where they get that sweet Wall Street money. And they just discovered that there's this weird latent demand for this entire new category of assets called crypto. And they can make so many products around it. It's blowing their minds. From their perspective, it is like the jackpot. They've discovered Disneyland, and they are a 7-year-old child, okay, whose favorite movie is, a princess movie, okay? So like they're losing their minds right now, and I don't think anyone quite understands this. Like the fact that Bitcoin broke those records opened like the floodgates in their brains for like, oh my gosh, we can make so much money off these things, and they're going to be super involved. I think you're going to see a lot of them get on chain, get a lot more native, and start issuing products in the same way that you might see, a crypto native company issue products, stable coins, real world assets, exchanges, decentralized exchanges, but like kind of like centralized, decentralized exchanges because they want to make a bunch of money. All kinds of stuff's coming, man. All kinds of stuff. And, they got to give their money to us to make it happen. They got to put their money into our bags first because we were here first. We were the early adopters. And you're talking hundreds of trillions of dollars. And we're over here sitting at what, like 2 trillion market cap right now? You are not bullish enough, whoever you are.
No, I was actually just thinking right now, realizing this right now, like what Michael Saylor is to like Bitcoin. It's like Larry Fink is that on steroids for the overall tokenization structure.
Yes,
which I'm just realizing now, like listening to this. That's all I had to say.
He's the most powerful man in finance. The most powerful man in finance is like a mega bull on tokenization and crypto. And he's actually right. Like the funny thing is like, apparently he's actually, smart enough to recognize like, oh my gosh, this is the future. And he sees, look at BlackRock, like where are they going to get a ton of new revenue? It just doesn't they're an established business. The model's been around for a long time. There hasn't been a place. Like they just kind of edge out some efficiencies and then they make money. This is new. This is an entire new space. They're like, oh my gosh, is the gold rush to them, the mega gold rush to them. They're losing their minds.
Yeah. I mean, I think, something that I kind of think about in my strategy of coming into this market was to be employed professionally within this space, right? Rather than really even like accumulating like massive bags and trying to like, I obviously I actively trade and I do all these different things, but my major goal was to gain some pretty major professional experience. And the way that I think about it, whether you're a trader or a professional within this industry, is if the market 10x's in size, if we go from $2.5 trillion market cap to $25 trillion market cap, it's not like you are only going to have the capability to get 10 times more, from that share, right? You could get 100x more, right? Because you were here for all of this time figuring out strategies and ways to be able to capitalize on the growth of the market.
You are so right. And what people also don't realize, and I think this should be a part of everyone's trading mental model, is when Bitcoin goes up, like it's huge, okay? So if Bitcoin doubles in value, that's an extra $1 trillion in the crypto markets. And you got to think of it as, I just think of it as like liquidity because it's got the word liquid in it. I mean, it's just easy to think of it this way, but think of it as water, okay? Think of it as a big old thing of water. And that water bleeds into everything else. Like even though the Bitcoin's in an ETF, it doesn't matter because the price of Bitcoin everywhere else went up. That means more capital flows into the crypto as a whole. So a rising tide lifts all ships. Bitcoin goes up, even if it's an ETF, it's going to lift all ships. And so you're going to see all these other assets go up. Same thing with Ethereum. Ethereum ETF hits, that thing skyrockets. Everyone's getting all these like maxi takes of like, well, I want my token to do that. Stop. Just stop it, okay? Because if Ethereum goes up, it skyrockets. So is your token. Your bags are going up because that's going to bleed in liquidity, more liquidity into the crypto ecosystem as a whole. And I would argue that when Ethereum goes up, it's going to bleed more liquidity into crypto as a whole, far more than Bitcoin. Far more because it's used in DeFi and is money across every chain, every single chain. That is going to be, I think, a parabolic moment to behold. And then the last question is, what's the all-time high for Bitcoin by end of year?
I think, do you guys know the post-halving previously, what like the monthly compounded growth of it would be? Like on the last two cycles?
Mm-mm.
I know I never looked at I did like doing my own math on it, using like 70K as like where we're at the halving. If you did like 5% compounded, it's basically like just over 100K. If you did like 7.5, it gets like 125K, and then like 10%, like monthly compounded, basically gets you like 150K. And I don't know, 110, gun to my head. I'm going 110. I'm going the lower end of that.
Okay, Nick.
Okay, I'm going 150. I'm going to go 150. Ooh. I'm ultra bull. I'm Bitcoin. I'm ultra bull on Bitcoin for this halving.
I'm going to go 173. 173 exactly. So 100 and...
By the end of the year.
No, sorry. Oh, by the end of the year. Oh my gosh. I was thinking by the end of the bull run. I didn't even read my own question.
I was like, but what's your end of the bull run then?
No. I'll go, okay, by end of year. Oh, 110 is a pretty good one, actually, by end of year. I'll say 105. 105,000.
Okay, I want to hear your end of cycle.
But in the cycle was 170.
Oh man,
I'm gonna go 173 for end of cycle. What do you guys end of cycle?
I'll go the same, like around that, like 175.
175, okay. Taking a little bit of hedge, so if it goes over that, you win. What are you, Harley?
If it stays that low, I'll say.
I don't. Not if it stays that low. What's your guess? You think it's going way higher? You name it.
No, I'm saying. Sorry. If the end of year is closer to my guess, I'd say it's probably like 240, right? But if it blows up and it's at Nick's number, I'm going like Willy Woo, like 327.
Wait. So what's the market cap for Bitcoin right now? Because let me look it up. We should be looking at trillion.
1.2 trillion. 1.2 trillion, I think.
Okay. So 1.2 trillion dollars, and if we times that times, let's see, 9. Oh man, wait, we're going way too low. We're going way too low. I'm gonna say 287,000 for end of cycle. 287,000.
My bags hope so.
I don't know. I kind of feel, I have this weird feeling that we could see a run on gold, like a Bitcoin versus gold kind of standoff. People start getting that in their head.
We just beat silver.
Yeah, so gold's next.
We
And
beat
gold's
silver.
13 trillion, so we're 1.2 trillion. So it'd be like 11x from here. And so, but I'm not even saying 11x. I'm saying 287. Like we tap out earlier, because that'd be like almost 600,000 per Bitcoin.
Yeah, it's not that far actually. Like because like one of the original like top signals from last time is like when people start claiming $1 million Bitcoin, but people are already doing that. And when you actually do the math, you're like, oh, well, that's actually 14x from here, which is high, but it's not too crazy for crypto, right?
All right.
Yeah.
Well, next week we'll do all-time high market cap for the whole sector. So be thinking about that.